Welcome to the LA Real Estate Podcast, your podcast on buying and selling real estate in Los Angeles. Justin.webb and I are here in person in studio, and today we get to talk with our good friend Natalie Salins, our lovely lender from Movement Mortgage. She's going to discuss interest rates, and we're going to talk a little about refinancing today. So here we go. Let's talk about some real estate.
Let's go.
Let's go. Okay, Justin, we're back.
Hey, Sara, it's good to see you in person. I feel like it's been a minute.
I know. How are you doing? Justin has been writing offers like a madman and also hanging out with his baby.
Yeah, lots of baby. My wife's, we thought we were taking a cushy TV show, it turned out to be 16-hour days, 6 days a week. So lots of baby for me lately.
Oh, your wife is working 16-hour days.
Yeah, and Saturdays.
Do you know what's funny is as a woman after having a baby, going to work, it's like a little vacation. It truly is. It's like a break. While you're working, crazy stressful hours job, it's a little bit of a break.
Yeah, I think it's real. It's both ways, right? Because I feel like you get frustrated when you're doing all this childcare and not working.
Right.
Then you get frustrated. I want to spend time with my baby.
Well,
so it's like
you get the mom guilt for sure.
Yeah.
Because, you can be crushing it at work and then you feel like a total failure as a parent. And then you can be crushing it as a parent and you feel like a failure at work. And that is a working woman in 2024 and maybe working dads too, probably.
Yeah, marry a realtor and then he can be flexible and pick up the slack.
There you go. That's a good tip. Marry a realtor. Justin, let's talk a little about what we're seeing in the market right now. We crazy low inventory right now.
Yeah, depending on the region. I mean, I've been doing a little work. I'm always doing a little bit of work up in the mountain communities like Arrowhead, Crestline, Running Springs, et cetera. And actually unusually high inventory up there for this time of year. But down here, it's, a lot more of the same.
Right.
I think, because there's a lot more homes up there where people don't live in them full time. It's a different calculus. Whereas here, if you've got your low interest rate, you're living in your house, like where are you going to go? What are you going to do?
Yeah, you're going to end up paying more property taxes and more interest on your loan. So do you think part of the reason a lot of people are selling in those areas is because of the new Airbnb short-term rental restrictions that seem to have just passed in LA County, not LA City, although they are talking about some other short-term. It's kind of a long conversation. We'll have another episode about this to update. A lot of things are in flux right now, but it sounds like there will be restrictions coming into LA County for short-term rentals. And of course, a lot of these homes are vacation homes. They're not really habitable all year long. Do you think maybe that's why some people are selling?
I think that it's a combination of a number of factors. So you've seen, those communities benefited from, the crazy run that we've had in real estate in Southern California. So the base prices are up quite a lot. So most of the people who bought years ago, they've got a lot of equity there. And then, there's a lot of question marks. San Bernardino County is different counties. They've got, those laws don't affect them there. There's a lot of people up there who want to restrict. It's basically the STR owners versus everybody else as far as the political will. And so they're trying to make it harder to get the permits, more restrictions, et cetera. And then you have last year, about this time, they called it Snowmageddon.
Oh, yeah.
They had 12 feet of snow land on those communities.
People couldn't even open their front door. The snow would be up above the door frame.
No, it was serious. People died. The grocery store roof collapsed. 3 or 4 houses blew up because the gas meters got buried, and the gas just built up under the snowpack and then caused an explosion. But for STR renters, there was basically months and months where nobody could get anywhere. Nobody could rent anything. So that really hit their numbers for last year. So I think all of these things, and then climate change, the insurance has been really difficult to get up there. So I think that all of these things come together and people go, is now a good time to cash out?
Yeah, I mean, long story short, our inventory in most of Los Angeles is still very low. See, we're still seeing multiple offers. People are a little bit more conservative about how high they're bidding things up because interest rates are still much higher than they were a few years ago. But there's still a lot of buyers out there. I would still say it's a heavy seller's market, especially with anything charming, turnkey, in a nice area, in walking distance to restaurants. It's still very competitive out there. So it's important to work with a good realtor, somebody that understands the market, that has relationships with other realtors, that can guide you on what is a good buy, what is not a good buy. You need somebody to have your back because it is a little overwhelming. First time home buyers often fall in love with little romantic homes. Sometimes those little romantic homes are not the best buy. So it's always important to talk with a really good realtor who can walk you through the pros and cons of each house and with their experience tell you, hey, you know what? Actually, I think this has a lot of potential. I think you're going to be incredibly happy in 5 years versus, you know what? I think you're going to outgrow this house. Are you planning to have a family? Are you planning to get married one day or live with a partner? If so, is this house going to be too small? Is it okay just to have one bathroom? I mean, these are conversations, and the answer might be yes, that is what I want. But having a good realtor that has your back, really important. Justin and I and the Skelton Group, we're happy to help you on your journey. Please reach out to us through the podcast notes. We love working with first time home buyers. That really is our very favorite thing, getting people into homes and getting out of renting so you can build your wealth.
Yeah, and we take as long as it takes. Whatever realtor you work with, whether it's us or another one, just make sure they're willing to, they're pointing out the good stuff and the bad stuff about houses. They're not just there to kind of make that sale happen. Most realtors are really good and really professional, but there are outliers. So, just make sure you get a good one. If you come to us, then you know you're getting a good one.
Here's a buyer's tip. When you see properties for sale on the internet, make sure you also keep a note of what houses finally sell for because you might be surprised. List price does not equate sale price. A lot of houses that are listed low sell for hundreds of thousands of dollars more in Northeast LA. So make sure you're looking at both those prices. Natalie Salins joining us on the LA Real Estate Podcast, one of our favorite guests. Natalie, welcome.
Hi. Nice to speak with you guys again.
It's nice to speak with you. And we can also see you right now on a screen because we have very advanced technology here at Real Voice LA. So this is nice. We get to see your gorgeous face.
So good to see yours.
So Natalie, thank you so much for joining us. I know this time of year, people are very, very all in on their taxes, their tax situation. A lot of people file quickly. They'll do things without talking to their lender first. So talk to me a little about some of the do's and don'ts as far as filing your taxes if you're looking to buy a house.
Yes. Okay. So if you are self-employed, please speak with your lender before you file the taxes. Not that there's anything that we're going to necessarily change, but it is important that you don't go ahead and file and take a bunch of losses that didn't have to happen this year, maybe, or if you're writing things off, to be a little bit more strategic about it because we add back income for certain line item deductions.
So, for example, if somebody was, let's say, a photographer and they had the choice between buying a $10,000 new lens this year when they haven't made as much income versus waiting to buy it next year and writing that off, that could really change the amount of loan they're qualified for.
Yes. Well, you happen to give an interesting circumstance because when you're buying cameras or equipment that depreciate, that's one of the line items that I can actually add back in. So that particular instance is actually okay because most likely if somebody's buying a camera or a lens or a computer or a car, they can take a massive depreciation deduction, and I get to add all that deduction back into their
Oh,
income.
that's really good to know. So also maybe check in with the lender before making really big purchases that are related to the company.
Absolutely. Just for all reasons of understanding your numbers, understanding how you filed last year and where that's going to qualify you for. And then depending on how you file this year, how much that can qualify you for. So just really knowing the number base before you go ahead and lock yourself in until beginning of 2024.
And how are you how have the loan products changed? Because I know quite a few years ago you had to use 2 years of income if you were self-employed, or an actor that's working on sets, all that sort of thing. What kind of loan products do you see those buyers going into now? And do you still need 2 years of tax returns?
We don't. We absolutely do not. So there's, depending on how long the person's been with the company or in the line of business, most of the time we can take a 1 year tax return for self-employed, for corporation, for multiple W-2, 1099 buyers, anybody who's freelance, independent contractor. We really only need 1 year of returns. Or even if you haven't filed 2023, I can go off 1 year of the W-2s. So you round up all your 23 W-2s. I'll take that total. 1 year is a standard with jumbo loans, and that's anything in 2024 over $1,150,000. With jumbo loans, almost every single jumbo lender is going to want 2 years. But Movement has a program up to $3 million where we allow 1 year tax return.
And then what are you seeing as far as rates right now? What's happening? Everybody was saying, not you. I mean, you've always been very real about we can't predict what's going to happen with interest rates. But, people, I think, were expecting these massive decreases in interest rates, which haven't really happened. But what are you seeing as far as rates right now?
Sure. So right now, rates have come down actually a little bit, and we're looking pretty good. If you have a large down payment, I'm in the low sixes. Standard rates are somewhere between the mid to high sixes, depending on what program. FHA in the low sixes. Jumbo loans are in the high sixes right now, and that's for high balance and jumbo. So yes, we got a lot of news last year in December that rates are going to come down in March. The Fed did say they were going to lower anywhere between 3 to 6 times this year. And then the numbers in January came out super positive. There's a lot of consumer confidence. And I mean, you guys, the economy is doing well. Look how people are spending and buying and paying their bills somehow. I don't understand how. I don't know how they're managing to make it work with how high interest rates are. I mean, if you have a high credit card balance, that's a big payment per month. But everybody's managing pretty well, and the numbers are looking pretty darn good right now. And so the Fed decided to kind of hold things steady for a little bit. We are thinking they're going to start to come down sometime in June or July. I do not expect to see 6 cuts this year. I think at best we'll see 3 starting maybe in July. We'll see how the numbers come out for February in the next week or whatever. But I think we will see them come down. I don't think we're going to see a big raise in them. I think that they'll kind of stay steady until the Fed decides to cut them. Once the Fed decides to cut, it's going to be an announcement before they actually do it, right? That's when we'll start to see the shift. The shift is based on hedging the fact that the rate cut is coming. That's why rate cuts went down in December and then back up.
And then we always say, unfortunately, as a buyer, if rates go down, it means everybody that's been sitting on the fence now decides this is the time to buy a home because rates went down. And then it means more bidding wars, more multiple offers, higher sale price points, and it can be really gnarly for buyers. So the other thing we talk about is the potential to later refinance. So it's important to get your house at a good price and a good rate to make sure that you can pay the monthly payment. You're not going to be house poor. You're always going to be able to pay your monthly payment. However, if rates do drop significantly a few years after you buy, you can refinance. Natalie, can you just talk me through just how the refinance part works? I've done it. Justin's done it. I think I've refinanced actually 3 times at this point.
I think we did twice or
yeah,
something. Yeah.
Yeah, because I bought in 2008. And at the time, I think I was at 6.75, which at the time was a great rate, although, of course, house prices were a lot lower. But can you just say somebody is a little nervous about they're buying for the first time. What exactly is a refinance? What does that mean?
Sure. So I will start. I have a flyer that I can send you. Anybody in the podcast who wants to know, they can email me and let me forward it. I have a flyer called The Cost of Waiting, and how it really doesn't make sense to actually. For every 1% in interest rate, something like 15 million buyers fall out. Not because they're afraid, because that's a whole other slew. It's because they don't qualify anymore. And that's for every 1% higher. So imagine for every 1% lower that we go, a slew of more buyers are going to come into the market. And our buyers now will have a lot more competition, of course. So if they wait, number one, the price is going to be much more. Number two, they will probably have to offer more because there's going to be a lot more people on the table for that same house. Whereas if they buy now, they can actually get into a property without too many crazy competitive offers and such. That's picking up a little bit right now, but we're still better than we were. And then when everybody else comes into the market because rates go down, they're going to have the house and they can just refi and get the same lower rate that everybody who's standing in line to get the house will get as well.
And for anyone listening, refinance basically means you're getting a new loan on the house. So you would work with a lender like Natalie that can talk through what your goals are. Sometimes people pull money out to do a home renovation. I tend to be more conservative. I think it's always good to have equity in your home. And so, Natalie, explain what somebody would do to get this new loan.
Absolutely. So we refi you to a lower rate, right? So refinance basically is kind of the whole process again, where we get all of your documents, we go through underwriting, we do an appraisal because we have to understand the value of the house. So almost all of the same action items that happened on your purchase will happen again on the refi. It is an entirely new loan. So if you've had the property for 5 years, we may want to consider doing a 25-year term, because you may not want to start over again at 30 years if we're doing a 30-year fixed. So we chat about the numbers and talk about what those monthly payments look like. We find something that's comfortable for moving forward with the loan being at a lower rate. So there's different reasons. You can refinance because you want to lower your rate, which is called a rate and term, or you can refinance because you want to pull money out, and that's called a cash out. It depends on what it is that you're interested in doing. A lot of people do cash out to pay off high debt. A lot of people do cash out because, like you said, they want to do renovations. Some people do cash out because they want to buy new property and they want to invest in something else. So it really just depends on what your purpose is of the refinance. But refinancing, movement, we can do them very quickly. Doesn't have to be as difficult. Of course, even with that said, there isn't a timeline. So the stress level of a refinance is much less. So you send me the documents when you want. We get it all together when it's, good for you. If I'm locking in a rate because rates are excellent, we want to land that rate, then we're going to have a timeline on when we have to close that refi.
Well, that was incredibly helpful. So for anyone out there listening, worried about the rates, there is the option to refinance in the future. And I would just say again, I know we've said this before, but rates come down a lot slower than they go up. So when rates go up, they seem to jump up very quickly. When rates go down, they sort of trickle down. So the best thing you can do is work with a really good lender like Natalie at Movement Mortgage. We've worked with Natalie for over a decade. Justin and I have both personally used Natalie for our home. We actually Justin recently refinanced, I believe, with Natalie.
We did a loan on my primary house last year, I guess, and then we refied my cabin. Interesting cabin, because one thing that we didn't discuss was that, like, when we bought our cabin, we were paying PMI. We refinanced. Not only did we get a lower payment, we lost the PMI because it appreciated so much in the 3 years.
And that's the private mortgage insurance that you have to pay when you have a lower down payment. So when you refinance, sometimes you can get that booted off of there. So it saves you money, a lot of money in the long run. Well, Natalie, it's always a pleasure to talk to you. I'm sure we'll have you on many, many times in the future. And thank you for all of the incredible information.
Of course. I look forward to it always. It's so nice to see you guys and chat with you again.
Here's a buyer's tip. This is my favorite tip, and please don't hate me, but do not spend thousands or tens of thousands of dollars on an overpriced wedding. Do not do it. Use that money towards a down payment. You can have a beautiful ceremony in your backyard. You can do something very simple. You can elope. Don't spend tens of thousands of dollars on a wedding. One of the biggest reasons why couples get divorced is because of financial issues. So start your marriage the right way with a down payment for a house, build your equity, and you'll be thanking me in a few years. So Justin, as a woman and a homeowner, I wanted to take a few minutes today to acknowledge International Women's Day. It happened a little while ago, but I think as a woman buying a first home, I think we don't discuss it a lot. And I know you're not a woman, but you are raising a daughter. And I just wanted to take a few minutes and acknowledge some of the changes that have happened for first-time home buyers as women. Did you know that before 1974, a woman could not get a mortgage or own a house or a credit card in her name? She had to have a male cosigner.
I did know that because I was just that topic came up on a podcast that I really like last week. I was listening to in my car.
Very good, Jess.
Yeah.
That's amazing. It was the Equal Credit Opportunities Act that was passed. Since they passed that act, financial institutions couldn't say no to a loan or credit applications because of gender, marital status, or family situation. So let's fast forward to today. Single women are now making 1/5 of all home buyers, and single men are making 10%. They're 10% of the sales of single home buyers. So ladies are taking the lead in the home buying game because women are financially a lot more, making more money, more women are working. And so things are changing a little bit. And I just want to kind of shout out to some of the women out there that are thinking of buying. I think it's really important that you talk with a lender, you talk with a financial consultant, and figure out how you're going to set yourself up for independence and financial security. Because 50 years ago, women couldn't. If you were in a bad, abusive marriage, you could not get out of that marriage because you didn't have any ownership towards the house and everything was in the man's name.
Couldn't get a job without your
Right.
husband's permission. I saw the same podcast, but I can't give you a date on that. But I think that goes to like the 20s or something.
It's crazy. I mean, really a lot has changed, but there's still quite a bit of work to do. And just because I can, when I send DocuSigns out for couples, I put generally I put the woman's name first now. And traditionally, the man's name would always be first. And just because I can, I often put the women's name first now. Because I just feel like things need to shift in that direction. We recently had a transaction where we were working with a client who is a wonderful, hardworking, incredibly intelligent woman who is buying a home as her own property. And when we submitted the offer, the listing agent was asking all sorts of strange questions about older listing agent. Well, we're just a little concerned that it's only her name. And how is she going to afford this payment?
I was like, did you look at her financials? She's a boss.
She's a boss. She makes a ton of money. She works in AI. She's incredibly intelligent. So there is still a little bit of bias out there. I would say there's still a lot of bias. We also recently had a contractor that would only talk to her male partner and not her. And we just thought that was so weird. It's like, don't you want to talk to the boss? She's the boss. This is her house.
She's writing the checks.
She's paying the money.
Right.
So there's still work to be done. Just want to give a shout out to International Women's Day. I know it happened a couple weeks ago, but I think as women out there, and this is for men too, I think We are shifting in the right direction. There's still a lot of work to be done. I think it's incredibly important to set yourself up financially as a woman that you always have some financial security and you know where your money is going. I don't believe in coming home and giving your husband a paycheck and having him put it in the bank account and you don't know what your finances are, you don't know what your bank balance is, you don't know what bills and checks and accounts you have. In this day and age, I think women need to be more aware of their finances if they are in a married relationship. And that's a good lesson for everybody in every couple. You need financial literacy. It's not hard to understand, important for budgeting. And it really does set up a marriage for success if you can both be on the same page about financing. But it's a discussion, an important discussion to have before marriage, I think. Often as well, when you get married, maybe you aren't making a lot of money. So you're kind of learning as you go along. The older you get, generally, the more financial security you have. But really important to think all these things through when you're buying a home. Justin has a daughter, so you want your daughter to be in charge of her finances, I'm sure.
I do. I also have a wife, and we have a very 21st century arrangement. We each have our own personal accounts. We have a joint account. Each month we each pay half in. We both make good money. We both work really hard. We each have our own savings accounts. We each have our own checking accounts, so we have complete financial independence. My grandma had an allowance, not really a good and a terrible relationship.
And it's important, I think, somebody has control of all of the finances. They really do have the power in that relationship. And I think that needs to change. Now, if you are in a relationship where one person is a huge earner and the other isn't, you can work that out. Maybe they pay a percentage of the bills and just keep things balanced. But I really, truly believe that in a relationship, everything should be out in the open and people should have financial security. People should know where the money is going, and there shouldn't be a massive power shift one side or the other. So women out there, get your finances in order and become financially literate. The other thing that is really interesting, I was just reading this morning, is that women are less likely to refinance. So women out there, if rates start dropping, I want you to go to your bank or call Natalie at Movement or any of the good local lenders and see if it makes sense to refinance. So I don't know why that number is so much lower, why women are less likely to refinance than men. I don't understand that, but we can shift it. Let's get the word out. Be smart about your finances. Be in control of your own personal finances. Thank you so much for listening to another episode of the LA Real Estate Podcast. I'm Sara Skelton, your host. I'm with Justin.webb today from the Skelton Group. Special thanks to my guest, Natalie Salins from Movement Mortgage, and we will see you on the next one. Yay! Now we can party. And by party, I mean have a nap.